Everyone, I'm sorry I was running a little bit behind today. I had some things that I had to take care of that I'm taking longer than I anticipated. So I'm still just on till 7 o'clock. I hope that you all are getting this notification and can get on. There's really no major topic. We're going to talk about the spring housing market. I'm going to answer any questions that you guys have for the next 45 minutes or so. I'm going to start with some questions that were left on the community page. If you don't know me, I'm Shahida Hill, getting you over the hill to home ownership and helping you confidently buy your first home. So one of the questions was about USDA financing. So USDA is a mortgage that you can get for rural areas. If you're moving to a rural area, then it's 100% financing, no down payment. You do have closing costs, but you have no down payment. So they were asking, would they qualify? So it really depends on where you are buying your home for USDA. Because there's income limits by area. So, the income limit for Georgia will be different from the income limit in Utah, for example, or California. But every state does have USDA areas. So you need to find that out for your state. I have 3 USDA videos that I would recommend that you watch so you can find out how to get that. But I wanted to make a note about government loans. So USDA, FHA, and VA are all for owner occupants. Like they expect you to live in that house. That's why they're generally lower down payment. VA, no down payment. USDA, no down payment. And FHA, no down payment. So all the government loans are no down payment. So you want to make sure that, you remember that, right? And you have to live in there for 1 year. So after a year, if you want to rent out your VA home, your FHA home, your USDA home, you can rent it out after 1 year. Okay. So just be mindful of that. Hi, Diana. Hi, Jamaican Black Queen. I see all of you. Thank you guys for joining me. The other one was about gift funds. And I have a story really quickly about gift funds. If you're a member of my Facebook group, if you're not, there's links in all of my videos for you to join. But a member of our Facebook group was getting gift funds, about $10,000. And if you go to the Facebook group and put in gift, you'll see like that thread. He was getting about $10,000. Now, a gift can come from a friend or a close family member. A family member or a close friend. Okay, and that's where the close friend comes in. The underwriter has to determine what they feel close is, because if you just get somebody random to give you the money, I think they are thinking that you may have to owe it back. So it's more like a loan than it is a gift. So they have to document that gift is coming from a close friend or family member, and they did not approve the person that was giving the gift. And you will have to, like the person that was giving the gift did not want to give the lender access to their bank account. Now you have to show the lender where you're taking the money out of, right? You're taking out the money out of this account, and then you're putting it in the person that's purchasing the home. You're putting it in their account because they want to see money coming from one place to the next place. So if the person that is gifting you the money is not willing to do that, then you don't need to use them as someone that's going to gift you the funds. And then I have a funny story about gifting. I had a client, not my client, but someone in my brokerage. They were getting a gift from a close friend, and they asked for a yearbook of the two of them, like in school together, to prove they were close friends. Because, sometimes they want a letter. How do you know this person? All of that. But they wanted some kind of confirmation, like a yearbook, showing that they were friends and they knew each other. So you never know what the underwriter is going to ask for. And you could typically get about 10%. In most cases, it definitely FHA, about 10% of your down payment or closing costs can come in form of gift funds. So if you have someone gifting money to you for your down payment or closing costs, just know how that process works ahead of time. And then if you are married, even if you're engaged, married, they consider that close. You can gift. So say only one person's on the loan, the other person can gift the funds to the either the spouse or the fiance. They can gift it to the other person. All right, there was one more question, but go ahead and put your questions in the chat please put your questions in the chat. I see you guys putting in there. I appreciate you joining me. The last thing was for a revocable trust with multiple buyers. They're basically asking, how can we buy a house with multiple people? And my answer is all the multiple people need to sit down with a real estate attorney. So everybody understands how you're going to purchase this property, what's going to happen if somebody wants to get out of the property and doesn't want to be part of the, ownership anymore. You need to pay for, a 1-hour consultation. Everybody comes. So say there's 5 people that want to buy property together. You find out how much the consultation is going to cost with the real estate attorney. Say it's $300 an hour. Then everybody splits up that $300. Y'all all meet with the attorney, make sure everybody's on the same page. And then that attorney can walk you guys through the best ownership structure of the home. So that's my recommendation for anybody that's buying property with multiple people. I do have a video on, like, if you're buying with your children or your parents or something like that. But if you're truly buying something with a lot of people, like not your mom, just your mom, or not just your your child or something, then you may want to definitely get a lawyer. Even in that video, I said, go ahead and get a lawyer involved, because there'll be somebody that wants out of that house. And then sometimes you have to refinance that house to get the other person out. If you cannot afford that house on your own, then, you're going to be stuck, or you have to go to a lawyer, and maybe sell the house, because no one side can afford to purchase it on their own or refinance it on their own. So those are some things to think about. All right, so I'm going through the questions. Again, if you're just getting on, I'm going to answer as many questions as possible from now to 7 o'clock. All right, so let's get with it. Hi, Patrice. Hi, Janet. Thank you, guys. I'm just going to say K84. Thank you for joining me. Kawana, thank you. Hi, how are you? All right, so let's go with the questions. All right, hello. What is the employment length to purchase? 2 years, typically 2 years, okay? Unless you're coming from college or some kind of train, like if you've been in college for over 2 years, then they will count that college as your employment history. So if you're just coming out of college, you can you have a job, you can get a job right out of college, because they will count college as your work history. It says, I just got a new job paying more and will be leaving the current job of 7 years looking to purchase. So that the second part of that is, you don't have to have the same job, right? So you could move from one job to another job and still have, as long as you have 2 years of employment, it doesn't have to be with the same employer. Miss Smile 30, it does not have to be with the same employer, as long as you have 2 years of consistent employment. Here's the thing. It's the one thing you have to think about. It's typically, as long as it's full-time to full-time, W-2 to W-2. If you go from like a W-2 employee to a contracted employee or a 1099, then usually you have to wait another 2 years, because now you're like self-employed, and they want to see how that self-employment income is going to go before they lend you money. Are you going to be making the same amount each year? So just be mindful of that. But if you're going from one W-2 job to another W-2 job, as long as you have 2 years of employment, that's sufficient. Thank you for your question. All right, let me see if I can answer this, XO. I have a question regarding credit. If a creditor from an account that was opened in 2015 never reported to the credit bureaus, can they now initially report to the account in 2023? Perhaps. There's some accounts, and this is a credit card, but for example, say, I have a cable, like I have, internet with Xfinity, and say, they never report to the credit bureaus, but if I pay my bill late, or if I don't pay them, then guess what? They're going to report it to the credit bureaus. So they don't have necessarily, like, they have to report. Some report every month, right? They report every month, and some don't. So you would have to see, generally people report. If they never report, they usually report when there's something negative, like there's a late payment, there's a missed payment, something like that. That's why people don't get credit for your rent. You don't get, as far, unless there's some special program. But in general, your utilities are not on your credit report. Your rent is not on your credit report. There are several things, like your cell phone bill is not on your credit report, because you haven't borrowed money from those places. But if you don't pay them, so if say you get an eviction, it's probably going to be on your credit report. If you don't pay your bills, it's probably going to be on your credit report. So just be mindful of that. So they don't have to necessarily report every month to the credit bureaus. All right, let's see. Okay, my ex-fiance and I purchased a home together in South Florida this past summer, and by winter, he kicked me out. Okay, this is not a question, I don't think, but let's make it as a warning, right, to all of our, couples that are maybe not married yet and they're buying property together. Now, if you're married, the only difference in married, you have different, security as far as property and all of that kind of stuff, because some things are handled in the marriage. Because you are married, you have some protections, right? Now, when you are not married, boyfriend, girlfriend, then it's like just two people, bought a house together. Y'all bought property together. I hope you're both on the deed. And I'm looking at that because he wouldn't be able to kick you out unless, let me think about this. If you were on the deed of that property, he should not have been able to kick you out. So, because the only way he kicks you out is if he's the only owner of that property, meaning you're not on the deed. Otherwise, both of you are, your house. So you can go to a judge and you live on one side, like kind of like a roommate situation. You own it and he owns it. Y'all stay together until probably a judge, right, is either going to say one person has to refinance the home to get the other person off of the deed or, off of the mortgage. Or so maybe you have to say a little bit more, B, but usually that's what happens. A judge is going to make you guys either one person refinance the home in their own name. But imagine this. So say last summer you got a 4% interest rate and, y'all could afford that together. But now if one person is trying to purchase that same property to buy the other person out, can they afford it by themselves at like a 6.5? And a lot of people cannot afford to do that. So that's why the judge will usually say, go ahead and sell the house and split the proceeds. And so that's what could happen. I would definitely, if I'm going to put any money in, if I'm going to help with the down payment, if I'm going to help with the closing costs, if I'm going to help paying the mortgage with my, if I'm not married, I'm going to be on that deed. Even if you weren't on the mortgage, he could have added you to the deed after closing. So just be mindful of that if anybody's thinking about doing that. All right, Charlotte, thanks for joining me. Hello, I'm looking to get pre-approved, but I'm curious your recommendation to get pre-approval from. So I typically, these are 3 places that I like you guys to get the 3 pre-approvals. One is from your realtor. So a lender that the realtor already has a relationship with. That can help you with, that agent knows they've closed, their clients in the past. They generally will have a better communication with you because they're a referral from one of their agents, that sort of thing. So one is that. If you do not have a realtor yet, like you're maybe a little bit further out from purchasing than your current bank or credit union, go ahead and just get a pre-approval from them. And then lastly, probably an online bank or broker. That's where I would get my 3rd pre-approval from. But if you're just trying to get a general idea, I would just start at your bank or credit union. They can give you a general idea of how much you would be pre-approved for. All right, let me see. B says something else. My name is still on the mortgage and title. I was told that there is not a possibility for assumption to get my name removed from the loan, so I can get it removed from the title as well. It's probably that you have to have it sold, or you have to, give up your rights. But you don't want to give up your rights on title if you're on the mortgage. Like you don't want to give up ownership and still be on the mortgage. That wouldn't make much sense. But I would go ahead, like at this point, you need a real estate attorney to let you know what your rights are. All right, somebody said that, South Florida. So email me, email me at info at shahidahill.com. Email me, put this in like the title and I'll try to get somebody for you. Yeah, but that's what I would do. You need a lawyer. But if you own, like I said, if you own the house, I guess, you don't want to be anywhere that is like confrontational, I guess, you want to just get out probably. But, he didn't have like necessarily the right to throw you out of a house that you own. But again, it may not be a good situation for you to be in. All right. Thank you for the question. All right. Patrice Sparks, does the property tax increase for new construction a year after purchasing? Typically, because let's talk about a builder. So that builder, when they are being taxed, so the person that's selling the property to you, which is the builder, they bought just raw land, nothing was there, and then they built your house. So when they were assessed by the taxing authority, right? When they were assessed, they were probably just assessed on the land because there was no structure. But when you purchase or when you close on the house, now it's not just land, it's land and it's a property. So that is going to be, more valuable. So you're going to pay a higher tax. Land by itself is not as expensive as a home on land. So when you are being taxed, you're being taxed on the land and the structure. The builder was just taxed on the land. So that's typically why it goes up. Now, either your closing attorney or your title company, depending on your state. Some states close with title companies. Some states close with closing attorneys. They should estimate how much it would be with the structure. But if they just estimated the taxes just with the land, yeah, you're going to be in for a surprise when the taxes come out. It might be that you were thinking you were going to pay, $50 a month in taxes. And then once they assess it with the structure, it might be $300 in taxes or so, because it's going to be substantially more. And sometimes people aren't prepared to pay that. Imagine you go from one, mortgage payment, and then the next month, your mortgage payment, or next year, your mortgage payment goes up $300. So you have to kind of plan for that. I did a video because that happened to me, not drastically, right? Because taxes went up, just values went up in my area. So you want to be prepared. Okay, I don't know if I froze. Okay. If I froze, I'm sorry. What I was saying is you want to be prepared for that to happen. So you want to watch the video that I have about my mortgage payment going up. That was the name of the video, why your mortgage may increase. If you didn't get that, Patrice, let me know in the comments and I'll say it again, because I think I did freeze for a second. All right, so it says, AV, what about Social Security? Can you buy a home on Social Security and Society? Okay, so I did a video on this as well, so watch that video. You can, right? So you can get pre-approved. You can get approved for a mortgage if that's your only income, but your approval will probably be low, because typically Social Security income is usually low on average. So you can get approved if that's your only income, but the amount may be low if you live in a low cost of living state, like they're really affordable properties, then that might work for you. But for the typical average home price, it probably won't work for you without a cosigner or without extra income in addition to your Social Security. But I did do a video on this. I also want you to look if you live in a rural area, look at USDA Direct, and they subsidize your mortgage payment for low income individuals. So you want to just look into that to see if it's an option for you. All right, thank you guys. Mark, it says rent, utilities, phone bill can be added to the credit report as non-traditional forms of credit. Good, Mark. Yeah, a lot of companies are allowing this to happen now. Okay, let's see. Sky's the limit. So do they use those debts against you? Is it from looking at your bank account? No. So utilities. See, the thing is, somebody else said this, once you put it on your credit report, maybe, and that might be a reason why you don't want to put it on your credit report. But if it's not showing up on your credit report as debt, then it's not going to be factored into your debt to income ratio. So you want to be careful with not adding a lot of things to your credit unnecessarily. So yeah, but in general, none of those bills, utilities, that sort of thing are added to your debt to income ratio. You really want those off of your debt to income ratio, because it could make your debt look much larger than it actually is. All right, Jonelle. All right, hi, Mrs. Hill. What if a lender locked rate up to closing per LE and guaranteed, or loan estimate, I guess, per closing, and guaranteed lock rate verbally. And less than a week from closing, the closing disclosure had discount points and higher rate. Oh, this is she has a, sorry, let me go back. All right, she says continue. The loan estimate had no discount points. Lender cannot be reached or varies sporadically with incomplete help. How should this be effectively addressed, please? What I would advise you to do is talk to this lender's supervisor. All right, so if it's an official loan estimate, then you can perhaps hold them to that if you locked your rate at that time. If it was an unofficial loan estimate and you did not lock your rate, then it may not be as strong. But at this point, all lenders have supervisors. Very few lenders are working on their own, like have their own independent business. So if I'm not getting what I need from this loan officer, then I'm talking to the loan officer supervisor. So call like the main number, tell them, you need to speak to a supervisor or manager about your loan, and then go over them. And I would pull everything that I've ever, any communication that I've ever had with this lender, any estimates, any official, anything you've signed, that you have showing that your rate was locked, because what you said in the last one was verbally. You can't trust anything verbally. Typically doesn't count. If they told you things verbally, that's one thing, but you have to have it in writing. So make this be a lesson to everyone. A lender or an agent, especially builder agents, they can tell you anything verbally, but unless it's in writing, they can say, oh, this subdivision is going to have a pool and a cabana and a tennis court. And then maybe down the line, they're not selling well, so they scrap the pool, cabana, tennis courts. Unless they had it in writing what the amenities were going to be, then they're not held to those amenities because they told you verbally. And it's a lot like that in lending, that they could say, hey, I'm going to lock your rate for 120 days at 5%. You need to see that in writing, that they've locked your rate for 120 days and it's in writing. So Jonelle, at this point, hopefully you have an agent that can kind of help you with this, but you need to start talking to the manager of this lender. Okay. Talk to the manager of this lender, gather everything that you've ever discussed with them, gather everything, that they've ever said. If it wasn't in a contract, maybe emails, text messages, anything, gather those things together and then go try to get to a manager. All right. Let's see. I got a pre-approval in the mail for a company I never applied to. Should I take it seriously and call? I wouldn't. Sometimes it might just be, that they're trying to get business and they're saying, oh, you could be potentially approved, kind of like a credit card pre-approval. You could be approved for $40,000 on a Visa. So I wouldn't pay attention too much to that. It could be more that they're just trying to, get your business. Read the fine print on any of those things to see what it actually says. All right, Quincy the realtor. What are you asking me, Quincy? What about hard money or private? How do you get those funding opportunities? So a lot of lenders. Okay, so if I was this, I guess 3 ways I would probably do it. Number one, your brokerage probably has investors, like agents that deal with a lot of investors. So I would ask, and a lot of brokerages, you have your own Facebook groups and that sort of thing. I would ask in that Facebook group to your other agents, do they know of any hard money or private lenders that their investors have used in the past? That's the first thing that I would do. The second thing I would do, I would ask a traditional lender, do they know any hard money lenders they can refer you to? Because a lot of times if a traditional lender is not able to finance someone or an investor can't get financed, then they'll refer them to a hard money lender. And then lastly, Facebook is your friend as far as groups, because almost everybody has a group. I would go to the investing Facebook groups on your in your city. So like say you're in Chicago, then I'm going to like Chicago investors and that sort of thing, put in those search terms on Facebook and then ask around there and try to, see which ones are legitimate, not legitimate. But I would first kind of go inside with agents that know these hard money lenders, have closed with them in the past. Okay. Good question, Quincy. All right, so Forge Hill. Hey, Hill. I'm a first-time home buyer seeking a VA loan nearby Fayetteville, North Carolina, March 2024. So next year. During the next 10 to 11 months, I'm building credit and saving. When should I hire the realtor and shop lenders? I would do that probably 3 to 4 months out. So I may be doing that in like November, December of 2023. Because I want to know earlier. I want to know like in December if there's any, you've worked on some things, right? But you want to know, are you working on the right things? Have you done everything you want to do? I might even get a pre-approval now. If, like you said, you're working on building credit and saving. If you go to my live playlist about, are you waiting too long to get approved? You can get approved now, and they could tell you specifically what you need to do to get where you need to go. So I like, having that plan early, because they can tell you, hey, right now you're approved for this, or you're not going to be approved until you do this, this, and this. And then you have a plan that you can, get together before even December. But if you want to wait, you don't want to do an approval now, then you can, I would start around November, December of the end of this year, to be ready for March. And that's for the realtor and the lender. Good question. Thank you for your service. And I have a good VA video in that live stream. I have a good VA video. So watch that, please. All right. Let's see. All right. I have a super chat. Let me do this really quickly. I'm going to find it. All right. Thank you, Farm the Ace 7. Thank you for the super chat. Can my realtor help us buy a house which is being sold under a different realtor group? My realtor is independent, but the home is under Compass. Yes, it does not matter at all. So we're all with different brokerages. So one agent might be with Remax, another with Compass, another with Century 21, Coldwell Banker. There's a lot. There's probably thousands of realtors. Some of them are big, like Compass and Remax, and some of them are small. Like I'm with a small brokerage in Atlanta. But we all have access to the same system. So if you're looking for a house, they have the same, it's called MLS, the multiple listing service for your city, your state. Everybody has access to the same thing. So a Remax can make an offer on a Compass listing, right? So you don't have to be Compass to Compass or Remax to Remax, or it could be anybody. Anybody can make an offer. Any agent can represent you and make an offer on any home. Okay. So just know that the brokerage doesn't matter at all. All right. Good question. Let me go back up. Okay. I forgot where I was, you guys. I think I was here. Sharna. Some USDA qualified areas are in cities as well. You can pull it up on HUD. I think she was just answering somebody else's question. Make sure you have a question mark with your question. So, because I know you guys are chatting amongst yourselves too. So go ahead and put a question mark there, and I'll know that you have a question. But yeah, Sharna is right. So USDA, don't think that they're like so far out. Sometimes, they're a little bit closer in than what you may think. All right, so what is a home site premium site? So I'm thinking you're thinking of new construction, right? What are some premiums? So a lot of times builders will put like a lot premium on cul-de-sac lots. So if your house is in a cul-de-sac, because that's prime real estate, because that's the end of a street. So, families like to get those kind of properties. Imagine like your kids could be playing, or riding their bikes in that cul-de-sac. There's not going to be as much traffic in that area. So cul-de-sac lots are probably like the number one as far as a subdivision. Those are like the prime lots that everybody wants. Other lots that people want maybe flat land, like a flat backyard. You've gone to kind of subdivisions where they're on a hill, and so there's no yard, so they'll have like a deck in the back or something. So that's not as favorable, because people usually want some kind of yard space. So they may put some premiums on if you have a larger lot. And then corner lots are usually very popular because you're getting, again, more land. because you're right there on the corner. So it can go by the size of your lot, the location, all of those things would be lot premiums. Maybe it's a little bit more private than other lots. Those could have lot premiums. If you're in a community that has lake or golf access, so if you could, if you're on, off the golf course and you have a view, or you have a view of the lake, a view of the golf course, those could be premium lots as well. So when you're looking at a subdivision, you want to look and say, okay, what is, where would the best place for me to be? I don't want to be on a street. I want to be in a cul-de-sac. I don't want to be, with no view of the highway or something. I want to be more inside, and I want to have a view of the golf course or something like that. So I think that's what you're asking me. Hopefully it is. All right. I think Kawana had a question. When purchasing a home, can your payment be every 2 weeks instead of once a month? Okay. Yes, but you need to set it up that way. So if you pay your mortgage every 2 weeks instead of once a month, because there are times where you're going to have a longer month, you'll wind up paying usually one extra payment per year. Okay. So if you are splitting it up and you're paying, every 2 weeks, then you'll wind up paying, one extra payment per year. Now, if you just send it in to a mortgage company, what they're going to do is just apply that money to your next payment, right? You have to specifically say, you want this applied now, because they're not going to allow you to overpay. They're like, oh, you overpaid. Now we're going to credit that to your next payment. You want that money immediately applied to your principal, typically. And another way to do that is just, take one of your payments, divide it by 12, and then send in an extra principal payment. Okay. Send an extra principal payment once a month. But some lenders do allow you to set up bi-weekly payments. Just make sure that you're getting it applied to your loan and applied to the principal every 2 weeks. Because again, if you're just sending it in, then it may not be applied correctly. But good question. Okay, Joseph, how do you avoid your mortgage from going up due to higher taxes? There's really not a way you can avoid this unless you're a senior. A lot of states have senior exemptions because they know seniors are on fixed income. So either they will eliminate a big portion of the taxes, either at 62, 65, they vary, or they will freeze your taxes. So when you get to be a senior, they'll freeze it. So they'll never increase as long as you're in that home. So that's one way that you can save. But if you are not in that category, and sometimes they have that for disabled veterans, some veteran exemptions, that sort of thing. But for the typical person that does not qualify for those things, so say the taxes in your town are 20%, they assess everybody 20, it won't be that high usually, but say they do 20% tax on every house in your city, and your house is worth $100,000. That means that's really high. No, but that means your taxes are going to be $20,000, right? Yeah. So, but if your house goes up in value to $200,000, now you're paying $40,000. The tax rate didn't change, but because your value changed, then your taxes have increased. And that's what typically happens. But usually, with the exception of this last 2 years, this COVID real estate boom, right? Values don't go up as quickly as they've gone up in the last 2 years. In some areas, they've seen, property values go up 20%, 30%, that's unusual. Okay, so that's why your taxes have gone up a lot during that short time period. So it's not a way that you can avoid it necessarily, but you have to think it's probably going up because the value of your home is going up. So just be mindful of that. But I did do a video about why my taxes went up, and it kind of explained how it happens. Or move to a state that has really low taxes so you won't be impacted that much. All right, let's see. Okay, Angel asked about what's that new law starting on Monday. So May 1st, I did that's my last video before I did the $5 video. That was my last video. I explained the whole May 1st thing. So I'm not going to go over it here, but I did explain the whole May 1st thing on that video. So please check that. All right. Joseph asked, do you have to apply for homestead exemption every year? In most states, no. Once you apply one time, you don't have to apply again. But if anything changes or you're able to qualify for another exemption, they're not going to come to you and say, like, say the senior thing. So say you qualify when you're 62. They're not going to say, hey, it's your birthday. You don't have to pay taxes. You have to go and reapply for that senior exemption. But once you have one exemption, if nothing changed, then you could, get that exemption. Now, some of you have to, if you have like an older parent or maybe a person with disabilities living with you, then you may qualify for the exemption, even if they're not on the mortgage. If they're like, if you have a parent on your deed or something like that, and say you're younger, but they're older, you may still qualify for that senior exemption in some areas. So you definitely need to check that out. All right. Thank you, guys. Let's see. Do you recommend consolidating credit card debt before applying for pre-approval? Typically, no, because when you're getting a pre-approval, they're not looking at all of your debt. They're looking at your minimum payments. So unless it's going to help dramatically, say you're consolidating for a lower interest rate or a 0% interest rate, or you're not going to have that big of a monthly payment. But if you have like 4 credit cards and they're both like $5,000 each, they're going to look at the minimum payment for all of those cards. Say one is $25, one is $50, other one's, $45, other one's $100. Then those minimum payments will be factored into your debt to income ratio. So unless it's going to help you with your debt to income ratio amount, then it's probably not necessary, because sometimes when you're consolidating the debt, you have to open up an additional account, right, to consolidate it, and that may harm your credit as well. So if you can just make it work with the credit cards you have existing, but don't close any accounts because that can hurt your credit as well, because the length of credit, if you've had cards for a long time, that could harm the length of your credit. So you don't want to mess with that, but just try to pay them down, as much as you can. I have a video about like a 7-day plan to perfect credit. Not that you're going to have perfect credit in 7 days, but this plan puts you on the road to perfect credit if you do those things in 7 days. So look at my credit playlist, and that video's in there. Thank you for that question, Nurse B. All right. 40. I don't know why everything's so small right now. Good afternoon. This is Aman. How much money should you have saved? I like the guideline of 7%. And I did a video this month about how much you should have saved before you buy your house. Well, how much you should save toward your house. I said 7%. So look at that video, because I kind of explain why I said 7%. Kawana, when purchasing a car, how long should you wait before purchasing a home? Okay, number one, how about getting the house first? Yay, the house first. Because some of you have really, really high car payments. And again, that car payment is going to be factored into your debt to income ratio, and it's going to make it harder for you to purchase a home. So my recommendation is house first, then car. If you could pay cash for a car, even better. But if you have a car right now and it's working, don't prioritize getting a car, prioritize getting a house, because you basically are prioritizing something that's going to depreciate in value. Cars, as soon as you get it off the lot, it's going to depreciate automatically in value. It has unless like a classic car or something, there's no chance that it's going to go up in value. It's going to go down as the more you drive it, right? So it's going to be worth less. Your house has a strong chance of appreciating year after year after year. So you need to prioritize your house over your car. But there's no set time. If you were going to buy a house first, there's no set time that you have to wait before you purchase a house. You could do it the next day if you have the credit, the income, and your debt to income ratio is still strong. But think about that first. I would calculate my debt to income ratio with the car and calculate it without the car. All right, and watch my video, Can You Afford a House? It's in my How to Buy a House playlist. Can you afford a house? It helps you calculate your debt to income ratio. All right, let's see. Make sure you have those question marks. Let's see. Adrian, seeking guidance. My only debt is a 6-figure student loan balance, current. I rented all my life and currently pay $1,400 a month. Credit score is 798. Would you advise home ownership? If you can buy, because what you didn't put in here is your income. So I don't know what your income is. But I would say if you can afford to buy a house with 35% of your take-home pay, then you may want to consider it. If you can afford to buy a house that's around your rent payment, you may want to consider it, because again, it's something that your rent is going to no one, right? Or it's going to your landlord to pay the mortgage for the apartment or whatever. So your $1,400 can be going toward you eventually owning an asset, or having that equity. So I do recommend home ownership if you can afford it. If you make $2,800 and you're paying, your mortgage is going to be $1,400, that's 50% of your income going toward a mortgage. I probably will not recommend it. So it really depends on what your income is. And I do have a video. What is my video? I can't even think. How much should your mortgage payment be? I think I have that. So watch that video. But it really depends on your other income. You say your only debt is a 6-figure student loan. How are you getting that down? Are you eligible for some kind of forgiveness with that loan? Maybe you're in public service or something like that. I would look at your entire financial picture to see if it makes sense. Thank you, Adrian. But I have a lot of questions about that. Okay, let's see. All right. So do you have any agents in the DMV area, preferably Maryland? Yes. Email me, info@Shahida Hill. Let me put that in the comments real quick. Okay. Yeah, email me there and I can help you. Okay. Let's see. Questions. Thank you, Auntie Rivera. Ramon says, I have a 2.75 ARM. All right, I don't think you have a question, but that's a low rate. It's depending on how long your ARM is for. I hope that ARM is for a while. All right, because if it goes up, can you afford that mortgage payment anymore? All right, so how does hiring a realtor work? Good question. I have videos on this. The videos are working with your agent. So working with your agent playlist. But basically, at least right now, and there's some things going on in the real estate business that this may change. But for right now, this is how you would find a realtor, especially on the buyer side, right? On the buyer side, typically you're not paying your agent directly, typically, okay? Because what happens, a seller has a house to sell and they hire an agent. And they say, okay, I want you to list my house for sale. I want you to market it for sale, and I will pay you 5%. Okay. So that agent takes that listing and says, oh, I'm going to get 5%. So let's go back to the $100,000 house. They're going to pay that agent $5,000 to find a buyer for that house. Now that agent can find a buyer themselves and get the whole entire $5,000, or so if I bring, say I'm the other agent, I bring you to their house and I'm representing you, then typically they will split that $5,000 with me because they didn't find their own buyer. They will keep $2,500 for themselves and they will give your agent, me, $2,500. So that basically your agent is getting paid from the seller's proceeds or from that agent's proceeds, because that agent was already promised 5% from that seller. So that's how it works. That's how typically you don't have to pay your agent directly. That may change a little bit because there's some lawsuits, like some seller lawsuits, that feels like it's not fair for them to have to pay, the buyer's agent, even though they're paying them indirectly. So that may change, but for right now, that's how it works in most cases. Okay. Hope that makes sense. And you can I have videos explaining that as well. Okay, Quincy, no problem. Quincy, the realtor. Quincy, you need to put where you are. Where are you, Quincy? What city? What state? Okay. Raymond says, I have a 2.75 ARM for 10 years. That's not bad for 10 years. How soon should I start considering refinancing? Well, the thing is, more than likely, okay, that, ARM is 10 years from now, who knows where rates are going to be. That's number one. But more than likely, I would think they'll be higher, right? But you should be looking at refinancing before it like in year 9, right? Unless there's like, rates go down dramatically, say rates go down to 2%, then you might refinance to a fixed rate then. Or you may see that rates are going down to 3%, then you may go, do a fixed rate then. But I have a video about when it makes sense to refinance. So you're going to refinance either when you have to, right, to go ahead and get this rate, or when you see a rate that you could live with. So it might be a little bit higher than what you have now, depending on what happens over the next 10 years. You may find that opportunity to go ahead and lock in a reasonable rate at that time instead of your rate going up. But a lot of times with that 2.75, usually in the agreement, it can't go up dramatically, each year. So look at the highest it can go up in year 11, for example. I would just make sure I understand that. But I have a video about when it makes sense to refinance. All right, so I'm going to try to get through as many of these as possible. Would you recommend someone going to grad school? Let me see. Would you recommend someone going to grad school to wait to purchase a home until after? I plan on going to CRNA school, 3-year doctor, becoming a nurse. Would you recommend someone going to grad school to wait to purchase a home? If you're usually when you're in grad school, I feel like you don't know where you're going to be full time. So if you're going to get through school, go ahead and get through school and then figure out where you want to be long term. I think that's what I would recommend to use. I guess if you're asking me, should you buy a house while you're in grad school? I probably wouldn't, because you might get a job in another state, another city, then you have to sell that house in 2 years. If people are buying a home, I want them to buy long term, 5 to 7 years at minimum, especially in this volatility that we're in now. So I would have you wait. Nurse, anesthetist, hopefully I'm saying that right, make a lot of money. So I'm sure you'll be able to afford a house shortly after college. Hey, you guys, it's Sir Ashley. Hey, bro, let's see. If y'all don't already, he's Mr. North Carolina. I think he's Mr. North Carolina and Mr. South Carolina right now. Hey, Sir Ashley. He says, amazing live and insights. Thank you, sister. Yes. If you've never watched Sir Ashley and I together, we have some videos on the replay lives, but he has a great channel. But if you're thinking about moving to the Carolinas, you need to hit up Sir Ashley. He's very calm, has a very calm voice, very soothing. All right, yeah, but definitely check out Sir Ashley. Thank you for the super chat, Sir Ashley. I appreciate it. All right, so I'm going, let's see. Y'all asking a lot of questions right now. All right, let's see. Let me see. How much more money would it have to be? I don't know what that means. I don't think buttercream. I don't know what a Ladau title is. I'm sorry. That might be specific to your city or your state, because I don't know what that is, honestly. Unless I'm just reading it wrong. Is it possible to apply for a construction loan in Florida when my little lot is in Georgia? Yes, as long as the lender, right? The lender has to be licensed in the state that you're buying in. So as long as your lender is licensed in the state you are buying in, then you can, yes. But if your lender is only licensed in Georgia and you're trying to buy a house in Florida, then you cannot use that lender typically, okay? Let's see, do you know how relatively hard or easy is it to secure a business loan to buy a home as a first-time buyer? But I have a business plan to list Airbnb or a short-term or long-term to start, okay. I think it's difficult, regardless of what people say on Instagram and on TikTok and all that kind of stuff. For the most part, when you're talking about business credit, right, they're going to be looking without using any of your personal things. Because most of the time, even to establish the first business credit, or they're looking at your credit, in conjunction with that. A lot of times, especially your first time getting business credit. But my answer to this is, if you are trying to buy a home as a business, then that business has to qualify for the home, right? So that means that business has to be making money, has to be making profit, not just revenue, but net profit. You can bring in $100,000 and only make $10,000 because that's your net. So I would, really look into this. I would talk to some lenders ahead of time. But if you're Airbnb business is making money, then you could probably purchase another property from, that business. But if your business is not making any money, how would you qualify for a loan to buy a house? So you have to really make sure your business is making money in order to qualify. There's nothing wrong with getting a house in your business name, right? If you want to, get rental property and all that, you're buying your business name, but your business needs to be making money. That's my main thing. Now you could, buy a house, off of your own credit, your own income, and then transfer that property in your business name. But your business has to be making money to qualify for those things. And I think a lot of people like, buy your house in your business name. But if your business is not making any money, you're not qualifying for a house in your business name. So that's my only thing for you to think about and start talking to lenders. Don't just talk to like influencers that tell you, I feel like that's being overly done. Like buy a house in your business name, do this in your business name. But focus on your business. Is your business profitable? Like you really need to focus on your business, getting that where it needs to be. And then so you can purchase assets in that business. All right, another super chat. Let's see. I got to scroll all the way down, you guys, for the super chats. All right, I'm under contract and set to close August 30th. Underwriting came back approved. Should I lock in a rate now or wait? Not sure in this market. So I like and I may try to pull it up while we're on this thing. All right. I'm going to try to pull it up. Give me a second, you guys. Not mortgage rate. I like mortgage reports for this. Okay, number one, I like for you to talk to your lender and see what they say. But let's see, rates today. Hopefully this will work without it going haywire on me. All right, now I don't see it. Okay. Hold on. So usually the mortgage reports will give you what their recommendation is on a rate lock. And I'm not seeing it today. So that's not good. Okay, I do see it. Let's see. Okay, hopefully this works. I'm going to share my screen or present. Let's see. Share screen. Hopefully y'all can see this. All right. See the way this says on mortgage reports, every day they give their personal rate lock recommendations. So they're saying, and this is what they're saying, lock if closing in 7 days, lock if closing in 15 days, float, meaning just let your rate float because perhaps there's going to be a lower rate in the future if closing in 30 days, float if closing in 45 days, float if closing in 60 days. Is at the bottom, it says, however, with so much uncertainty at the moment, your instincts could easily turn out to be as good as mine or better. So let your gut and your own tolerance for risk help guide you. So in the mortgage reports, they kind of tell you why they're giving you that guidance. Basically, our rate's going to, only reason that you would not lock your rate if you had a strong probability that rates were going to go lower. Now, if you decide like I need to lock it now, just in case rates are higher in the future, then you want to talk to your lender now. What happens if I lock today at 6.5 and rates go to 5.5? What happens? Can I just unlock my rate? Right? Is that a possibility? Have that conversation. Does it cost me money? Can I unlock and relock for free? Have all of those conversations, because worst case scenario in my mind, let me see, I'm under contract and set to close August 30th. Underwriting came back approved. Okay. Worst case scenario, and I guess you're doing new construction. So you're probably using the preferred lender, I'm thinking. But if you were not using the preferred lender, you could just not use that lender and say that, it's going to cost you to break your rate lock. Then go get another lender and get the rate at that time, So if rates are really 5.5, just switch lenders. Now, everybody cannot do that because it depends on your situation. But if you were buying like a resale and you had locked in a rate and they had a 45-day close or something, I would say if the first company isn't going to, give you the lower rate, just leave them behind and go get another lender at that rate, because, you can do that. They can't hold you and say, you have to use me. Now they can't penalize you either. But if you already spent like money on your appraisal or you spent money on certain things, you don't have to get that. They don't have to refund that to you, but they can't penalize you for moving from one lender to another lender. So right now, watch my rate lock video. I have video on that, but have a conversation right now with your lender to see what your options are. Thank you guys. All right. B says, thank you. Thank you, B. I appreciate the super chat. All right. So this is what I'm going to do, you guys, since everybody's here. All right. So let me try to get rid of some of this stuff. All right, I'm at the bottom, right? At the bottom of my thing. And I'm going to go up. The email you posted didn't work. Oh, man. Okay. Maybe I spelled my name wrong. I'm going to go back up. But it is info@shahidahill.com. Info@shahidahill.com. 2 E's. I'm going to go up and see if I spelled it wrong. All right. So I'm at the bottom right now. I'm going to go up. And when I get to a question that I've seen before, then that'll end our night. So hold on. If you got a question in the chat, I'm going to answer it. All right. Let's see. So Sarah Pell said the LinkedIn work. I saw that. I'm going up. Make sure you have questions. All right. Everybody says they love the comments. All right. Somebody said verified. Yes, because sometimes you can't sign a purchase agreement and a sale agreement under a new business. All right. So that's something to think about. Yeah. Definitely get pre-approved first. All right. I want to sell my house and buy another. How does all that work? All right, let me try to simplify it as easily as possible. You put your house up for sale. You allow people to come see it, right? And they, you get some offers. Somebody makes an offer on your property, you accept that offer. You'll have a closing date. So say that right now it's almost May. So say your closing date is May 25th. On May 25th, that's when you're going to close and transfer ownership. Okay. Now you can make an agreement with them that you're going to give them possession at closing, meaning pretty much if the closing date is the 25th, you're going to move out of the house, right? You're going to move out of the house on the 25th or before closing. And then after closing, they're going to move in the house. So you're clearing everything out. Now that makes some sellers nervous because what they're thinking is, what happens if I don't close and I move all the way out? Sometimes you can give them possession after closing, or you can make sure that all the funds are there. You can make sure that they're clear to close before you move out. You can make some kind of, maybe I want a date after closing to move out, those types of things. But basically you just transfer ownership. You move out of the house, have it cleaned out. They usually do a walkthrough ahead of time to make sure you're all out. And then as soon as you close, you give them the keys at closing, you move out, they move in. I've seen it happen various ways. Sometimes the day of closing, they have their moving truck. The other people have their moving truck and they switch. Sometimes the seller move out like a week ahead of time because they're really confident in that closing. And then sometimes they'll ask, in the agreement for, possession after closing, saying that they want to move. Say you close on a Friday. Maybe they want till 11 o'clock on Friday to move out, and then the buyer takes possession like on Saturday morning. So you can make it work so you feel comfortable that it's going to be closed before you actually move out of the house. And that's why you have earnest money too, right? Because if something happens, and so you want as a seller, you want the highest amount of earnest money possible. As a buyer, you want to give the least amount of earnest money possible. But if you have like $5,000, $10,000, increases with the price of the house. If you have a good earnest money amount, if something happens with that closing, you'll still be able to get your money. Like you'll be able to still pay your mortgage. You'll be able to pay for your move. That's why earnest money, getting a good amount of earnest money is really important, because if that deal falls apart, you want your moving expenses, you want all your expenses until you can find a new buyer. All right, so I see your super chats. I'm looking to purchase a second home as my primary. Let me see. Let me go back down. All right, I'm trying to answer y'all questions. All right, good evening, Shahida. I'm looking to purchase a second home as my primary. My other home is a rental. How could this affect the outcome of purchasing my second home? All right, so hey, Scott, thank you for the super chat. Okay. But you're saying your other home is already a rental. Okay, so if you're trying to use for your second home, let me make sure I'm reading this again. I'm looking to purchase a second home as my primary, my other home. So you rented out your first home and now you're going to move to another home, and you want to, I guess, purchase it as an owner occupant and have the lower down payment, right? So as long as different mortgage types have different rules. Like for FHA, I think, for example, it's 100 miles. You need to move 100 miles from the first property to kind of prove that you're owner occupying that second property. So you want to just make sure you know the rules of, proving that you're going to own or occupy that second property if you want to do that as your primary. Sometimes that's, it's, all you need is distance. Sometimes all you need is like you're upgrading that property. So maybe your first home that you're renting was like a 2-bedroom, 2-bath, and now you're buying like a 4-bedroom, 2-bath. Sometimes they see that you upgrading your property. What they're trying to avoid happening is that investors are taking advantage of owner occupant financing, right? So they're trying to make sure that you're not just, I'm going to buy this property, rent it out. Then I'm going to buy another property and rent it out. And I'm buy another property and rent it out. So they're trying to prove or make you prove that you're going to own or occupy that property. And not a lot of people will downsize depending on, the situation, if you're not retired or that sort of thing. So a lot of people don't buy like a 4-bedroom, 2-bath, and then go to like a 1-bedroom condo. So they may say, okay, well, you were trying to rent out that house and then buy, another house to rent out or something, another investment property. So you want to talk to your lender now. So before you make this move, talk to your lender now and say, hey, I had this house. This was my primary. I want to be able to buy my second property as my primary. What's my best way of doing that? So yeah, that's what I would talk to the lender about right now. All right. Thank you so much, Scott, for that question. Okay, all right, I'm going to come back up, you guys, and try to answer as many questions as possible. I'm not saying I'm going to get to everybody, but I will get some. But if you're coming in late, don't super chat me because I'm not coming back down. Scott was my last super chat question. I'm trying to look so I can put his thing back down. Okay, well, I might not be able to do it. All right, so let me go back up. All right, my closing is May 12th. Underwriting isn't communicating. I'm anxious. Watch my underwriting video. So go to my channel. Underwriting video is like right at the top. If you're a subscriber, you should see my underwriting video, or just search for underwriting or search for how to buy a house. You'll see the underwriting video. Watch that. It should like relax your mind. Relax your mind. All right, let's see. If you're wondering how much house you can afford, watch my Can You Afford a House video. I see questions about that. Can you use NACA with a USDA loan? No. NACA is a conventional loan with Bank of America. So if you are using NACA, you are going to be, and the thing is, you don't need to use NACA and USDA. NACA is already 100% financing, no closing costs, no mortgage insurance. So why would you need to use it with USDA? All USDA is no down payment. So is NACA. So you wouldn't even need to use them together. But NACA is a conventional loan with Bank of America. Like Bank of America has an agreement with NACA. So all of your loans are through Bank of America, and they are and they're already 100% financing. So no, you can't use them together. Would I recommend NACA over USDA or FHA? If you can get through NACA, right? Let's all pray. If you can get through NACA, and some people do, right? If you can get through NACA, NACA would be the better choice, right? Because again, no down payment, no PMI, no closing costs with a NACA loan. But a lot of people cannot make it through NACA because there's so many hoops to jump through with NACA. But you need to look for both. I would have also be qualified for another. It doesn't have to be FHA, it could be USDA, it could be conventional. You should have a backup plan to NACA. You should have a backup plan. So if you put all your eggs in the NACA basket, and then I've heard so many stories. I've been working with my counselor for 6 months, and the counselor quit, and then I had to start all the way over, stuff like that. So you want to make sure you have a backup plan to NACA. That's my recommendation. All right, I think I've answered some of these questions. You have to work for 2 years unless you're coming from college. Work for 2 years unless you're coming from college. All right, I'm looking. Thank you, our love. Love your content. Thank you for being on this live with me. I answered that question. I answered a lot of y'all questions. Let's see. Hey, Miss Hill, I'm from Atlanta, but relocated to South Carolina. Does your book help with first-time home buyers on a new build? So let me say about this. I'm going to have a new launch. So I don't know if it's a book, but I do have like a full guide that comes with videos, right? And it's linked with all of my videos. I'm relaunching this in June to make it easier for you guys to get, easier for you to purchase. But if you already have this, it's excellent. It kind of goes through the whole process, but there's not a separate part of it just for new construction. There's not a separate part. It's all about, buying your first house. It has everything you need to make good decisions. So I would say, Chanel, wait on that for a little while longer. Wait until June 1st. I'll be announcing a new relaunch of it to make it better. If you already purchased it, right, you're going to still have access to the new information as well. So just hold off for a second, please. All right. Can you talk about non-occupant co-borrowers and would you need to refinance later eventually to get them off the loan? Okay. Good question. Non-occupant co-borrowers, you shouldn't have to refinance to get them off the loan. And they could also purchase a home without them being on your loan, being a hindrance, like being on their debt to income ratio, as long as they can prove, right, that they haven't been contributing to the payment of that mortgage. So you could just leave them on there unless you totally want them off of your mortgage. They may not be on the deed as a non-occupant co-borrower. I can't remember. And I've had people do this loan in the past and have non-occupant co-borrowers. And the main question is that the non-occupant co-borrower asks is, will I be able to buy my own house in the future? And the answer to that is yes, as long as you can prove that you're not contributing to that mortgage. And you can prove that like bank statements, that sort of thing, that you're not putting any money in that area. But ask a lender, because I'm not 100% sure if you have to refinance to get them off. But good question. I'm putting a note there and I'm going to answer that for myself because that's a good question. All right. If you're looking for an agent referral, in all of my videos, I have two links. I have a link for outside of Georgia and a link for inside Georgia. Inside Georgia, outside Georgia, if you need a link for that. All right, let's see. Hi, Shahida. I'm currently in underwriting, have had my loan approved and just haven't been looking for homes online due to the market right now. I feel like waiting until these rates go down. I don't think you had a question, but I can understand that. In my last video about should you buy a house now, to me, it's no major rush. Okay. Buy when you're ready. You find a deal, you find something that you would love to live in long term. That's when you can make your move. But you'll be fine either way. But watch that video. All right, let me make sure I answered that question. I think I have answered that question. All right, about locking in your rate. I think I got most people. All right, let's see. All right. Do lenders look at all of your transactions in your bank statement when you're buying a house? Will that hurt you? Yes. They look at all of your transactions. So not initially, typically. Okay. So when you are just getting pre-approved, they kind of say they look over them, see if there's anything major they're missing. When you go through underwriting, they're looking through them with a fine-tooth comb. And what they're looking for in underwriting is making sure you don't have any debt that they might have missed on your credit report. So they're looking for any large payments that somebody's put into your account that's not part of your income that you've already disclosed to them, because you told them how you get, all of your businesses, you've told them all of your jobs, they have your check stubs, but say they start seeing like a $2,000, deposit in your account. They're going to say, where'd you get that $2,000 from? Because remember, all gift funds, if somebody's gifting you money for your house purchase, then they have to source it. They have to know where it's coming from. So they're going to look for that. If they see payments, say that every month you pay $500 out of your account and transfer it to another account that they don't know about. It's not a savings account. It's not any other account. They may say, well, who are you paying that $500 to every month? Where is that going? So they're going to start questioning, oh, I see that you made a payment of $285 to Honda Finance. Do you have, a Honda? It's not on your credit report. You may be helping somebody else with their car payment. Let's talk about that. So they're going through and making sure there's no debt that's maybe, you can have a personal loan that you owe somebody, but it's not on your credit. So they're being very, very diligent to make sure you don't have any debt that's not showing up. And also making sure, for the most part, you don't have any deposits coming into your account that haven't been sourced. So yeah, they're looking at that account big time. So just be mindful of that. Let's see how I spelled my name wrong. All right, Shahida Hill. Okay, it's info. So I left off the O. So it's info, INFO, at .com. So if you're trying to email me, do not email me. Okay, I'll show y'all a text somebody or email somebody sent me all of it. I was like, you need to ask your agent because you're under contract. And that's what my book, my video that I'm relaunching is all about. Because y'all wait to the last minute. Y'all in a transaction and y'all are confused and don't know what you're doing, about to lose money. And then you call me. When you're in a transaction, it's hard for me to give you advice because I'm like, okay, you have an agent. You need to be asking them. So just, that's what it's all about. But don't email me you're confusing. You're confusing things. But don't email me when you're in a transaction and you're having a crisis. I will point you in the right direction, but that's not that email. Sorry, I'm trying to get my email. So info@shahidahill.com. I left off the O because somebody said that I didn't put the right email in. All right, we are doing well, and I think I am doing well. All righty. Somebody says, how long? I have another question for you. How long does the title process take? Usually not long. Title companies, and I guess you're looking like the title search or the closing. I'll answer both ways. If they're doing a title search, making sure your title is clear, that might take like a couple of days at the most, unless you have like a difficult title home. But if you're talking about the closing, like closing on a house, then that might take like 3 or 4 hours at the most, maybe 2 hours. Because a lot of times you're just waiting for the bank to transfer the money and that sort of thing. But a typical closing is no more than 2 hours, 2 to 3 hours, I would say. Hey, Chef Brooklyn. Thank you so much. I appreciate the support. All right. Good evening, Shahida. When going through the final stages of the home buying process, how soon would I start transferring utilities to your address? Good question. And I have a funny story about this. All right. So I would do it like day of closing, because you don't want to transfer them too early and then your closing gets pushed back, right? And then, you have the sellers are living off your utilities until you close. So typically you want to ask the seller, either this is new construction or resale, you want to ask the seller at time of contract, when you're going under contract, for a list of the utilities. So you'll have that. And sometimes builders will make you transfer it a little bit early because that home is vacant typically, or sometimes they give you like 2 or 3 weeks after closing to transfer the utilities. But for like a resale, if you're buying a house from, a private seller that's selling you their house, I would say the day of closing. So you might call the water company, the gas company, and all of that stuff earlier to tell them like, I'm buying this house, how can I transfer everything in my name, that sort of thing. So I would say day of closing. And you're typically going to close on a banking day. You're going to close like on a Monday, a Tuesday, a Wednesday. You're not going to close on a Saturday or a Sunday. So you're going to close on a day that these places are typically open. And that's where I have my story, because I closed like on a Friday, which Monday I think was like a holiday, Labor Day, Memorial Day or something like that. And they never transferred the utilities. And my client was a seller. They turned off the utilities on Friday, like the day of closing. They were like, we're done. We're turning off. They called the water company and they said they wanted the water turned off Monday at like 10 o'clock. Okay. So the clients did not, and they had their truck, they had everything. They didn't have water on Saturday, Sunday, Monday, and I think they couldn't get their water turned on until like Wednesday or something like that. So, you know, they came into a house with no water. I think they had because a lot of times they'll leave the lights on and stuff and just transfer it. But the water company came out and turned off that water. So you want to get the list of utilities ahead of time, and then you want to call to see how the transfer process works. But unless you need to, just have the utilities, you know, coming into your name, you know, the day of closing. That's what I would recommend. All right. I think we're good, you guys. I think we answered a lot of questions. I stayed past my time, so I started late. It's 7:30. Join me. I'm going to do a Sunday live, not this Sunday, but I'm going to start doing Sunday lives. A lot of you say you like Sundays. So I'm going to start doing at least one live on Thursday and one live on Sunday, so I can catch people that only could catch me on Sunday. Thank you so much for watching. Please like, I forgot y'all, please like, before you get off, please like this video. It really helps the algorithm get this out to people. And I really appreciate your support. You guys have a great night.